Lots of familiar faces, even if you bounced an office or two and then came back. So thank you very much. I want to thank the officers who put this on, especially since it was supposed to be me. I want to thank Pauline Graff and also congratulate her for winning Outstanding Auditor of the Year. I want to definitely thank the rest of her team, Vicki, who, besides just being another accountant and great auditor, is a great public media and journalist. I mean, I am seeing so much come out of Porter County, and it's relevant, and it's a great example for all of us, but she's got her camera up here, and she's taking pictures because she's going to get the word out on what we do, and so definitely take advantage of her. Maybe she could teach some classes. And I also want to thank Patty, Julie, and Gail Pennington. I saw her come back, help today, so thank you for all the officers putting this on. And then I want to thank the State Board of Accounts, Lori and Shannon, especially Shannon, who's really trying to get you guys hard copies of every single presentation this conference. I know Fred's made it hard in the past, and I really wanted to say that we would not pull a Fred, but we're short-staffed in our settlement division, and so we are working to fill that position. We've interviewed some pretty qualified candidates, but it's really hard to find somebody with a little local government background who has the skills necessary to do the job that we need them to do, because we can't, you might be analytical, but to not have any idea of what their revenue sources or where they came from kind of puts you in a hard spot. So we are finding qualified candidates, and we're going through interviews. Hopefully by the end of November we will have that staffed. So in the meantime, we're all just picking up the slack. I did have my presentation done, but it was a lot easier than the other presentation coming after mine, and so just give Courtney a break. She says you're going to listen a lot better without the paper in front of you, so we'll see how that works. And then last but not least, I wanted to summarize what Wes said. We welcome Wes to the group, but I'm really happy to get him in front of all you guys, because all he knows is the county auditor gives him money when he was the clerk treasurer. That's all he knows. I can't wait till he learns exactly what you all do, because you calculate the property tax bills and then you apportion it out, and it's not simple. So I'm excited for him to get into the DLGF and see exactly where their time is concentrated, and then also why economic development may not be your first love. So let's take what he said. He said grow net assessed value. Yeah, he's right. And we do need to keep an open mind as county auditors when we see abatements or when we see TIF areas being started. Sometimes, we just think about all the work involved, but we do need to keep an open mind, because those are the things that will drive up net assessed value. And so to Wes's point, we can keep an open mind, and he can also learn exactly why maybe we haven't been the biggest proponents out there for economic development. And so we'll come together on that, and it's a great perspective to have. With that, I have a little presentation that's been a little thorn in my side since I started with the state auditor's office, because in 2014, the state legislature adopted a business personal property tax exemption, and which which was meant to keep people from having to fill out the long business personal property tax returns if the cost of their personal property was less than $20,000 in a county. And so they adopted this, and I'm just going to summarize it, because when we've tried to implement this year, because it was effective for this year, we've run into some challenges. And so I've got the different topics, which was one, the business personal property tax exemption, which was adopted in 2014 for the 16-pay 17 year, and that applies to all counties. So every county where there's a taxpayer that has less than $20,000 should file a return for that exemption or a certificate for this year only. The IC code is listed there so that you guys have the resource. The next thing that was adopted the following year, was in 2015, was a local service fee. And that local service fee was pushed, I believe, by the county assessors, and the county auditors did not object to it, to replace some of the revenue that might be lost when these business personal property tax returns that used to pay if they were under 20,000 would now not, they would be exempt. And so that is an optional thing for each county to adopt. And we're going to go into details later on exactly what they can adopt. And then the last thing is the late assessment penalty, which is the thing that kind of took me by surprise and the thing I wish I would have been paying more attention to in 2014 when this law was written. Because my confession, and I told AJ earlier, was that when this bill came through, I thought Allen County will never adopt this local service fee because that's a lot of work. And I thought, you know, it'll just be collected. And I never thought then about the late assessment penalty, which throws everything into a wrench. And now that will likely impact all 92 counties. And so it affects us all, and we all have to pay attention to it. So just to summarize, the business personal property tax exemption requires a taxpayer to indicate on the business property tax return or through a certification this year only that the taxpayer's business personal property within the county is exempt from property taxation for the assessment date. The acquisition cost of the taxpayer's total business personal property must be less than $20,000 and meet other criteria listed in the statute. Because I didn't list that other criteria because it's really not relevant to us implementing this. It's still self-assessed. The local service fee, this is the option. It permits a county fiscal body to adopt an ordinance to impose a local service fee up to $50 on taxpayers filing the business personal property exemption. A local service fee for an assessment date is due and payable at the same time that property taxes for that assessment date are due and payable. And a county may collect, it doesn't say shall, but a county may collect a delinquent local service fee in the same manner as delinquent property taxes are collected. And the revenue from the local service fee shall be allocated in the same manner and proportion at the same time as property taxes are allocated to each unit in the county, and they may be used by a tax unit for any lawful purpose of the tax unit. When you see that, everything, you're feeling like, okay, you know what? I know how to do this. I know how to allocate fees like property taxes in the county. They're allocated primarily only one way. Primarily, they're only allocated with tax rates, but however, there are a few revenues, other revenue sources out there that are allocated by property tax levy. And so we're going to get into that later. But then the third thing was the late assessment penalty. And this is why I think this can affect every county. If a person fails to file either the business personal property tax return or the certification this year indicating their eligibility for this exemption, the county auditor shall impose a penalty of $25, and that must be paid by the person with the next installment that is collected. And that is treated a little differently than the local service fee. And so I've listed out some of the challenges, and I know it's hard to read on the screen, so hopefully you guys were able to print the handouts. The local service fee, thank you. Yeah, of course, right when I want to talk, I'm getting a frog in my throat. I think that means I'm not supposed to be up here. The local service fee is a fee, not a tax, even though it was the intent of the people that passed this law to replace some of the tax that we were losing. It is a fee in statute, and it should be distributed separately from property tax. A delinquent local service fee, the law allows, doesn't require a county treasurer to collect delinquencies in the same manner as delinquent property tax collected. And I'm assuming because it was a personal property delinquency that we should use the same method that you can collect delinquent personal property under IC 6-1-23. Late payment penalty is not applied. Nowhere in any of the statute does it talk about applying a penalty to a delinquent local service fee because it's not a tax. Delinquent local service fee collected should be distributed separately from property tax. The last bullet point, which is the one that I'm still struggling with, is the late assessment penalty is treated as a tax and should be apportioned with tax rates and included in property tax distribution at settlement. The current law and the business property tax return form allow a taxpayer to check a box indicating their business personal property within the county is eligible for the exemption, but it does not indicate whether the business personal property is contained in one location or is in more than one location within the county. Without the ability to assign the local service fee to a tax district, there is no ability to assign a delinquent penalty, and it should not say delinquent penalty, so I just want to apologize. It should say delinquent local service fee. And so for those of you who are here and can cross that penalty out, just put local service fee. That was a typo on my mistake. Or we also cannot assign a late assessment penalty to a taxing district if we don't have a location. Now, I know all of you are saying, and I'm saying too, I'm sure 90% of those business personal property exemptions are located in one location. But I'm really not sure. And I really have no documentation that could show you that I think that I'm right. And that's the struggle that we're having here, because we don't get an option when we have to apply the law to our processes. And so we're going to try to be flexible, but as a result of not being able to associate the local service fee to a tax district, our collective recommendation, and when I say our, I mean the Auditor of State, the DLGF, and the State Board of Accounts, sorry. We've been meeting on this, but believe me, for as immaterial as this is, we've spent a lot of time trying to figure out how to implement this. But our collective recommendation is to allocate the total local service fee collected within the county, whether current or delinquent, to taxing units within the county based upon the tax unit's proportion of property tax to the county-wide property tax levy. So your certified levy to your the county-wide certified levy, because that is, if you read the strict definition of the law, that can apply because it's allocated as property taxes are to units within the county. As for late assessment penalties, I don't have a solution for you, and we have to go back to the Indiana legislature for guidance, because that should be passed out as property tax, but yet we cannot, under their current method, assign that to a specific tax district. If a county auditor can make an association of the local service fee to a specific tax district, then we will not take exception to the local service fee being apportioned by the same tax rates used to apportion property tax within that district, similar to excise. Still outside of the settlement process, but at least allocated within the district for the district that you've identified where it belongs. This method would require the county auditor to have some documentation showing how they were able to make that determination. What does this mean for now? It means that this is still, we still have a lot of challenges, and as long as whatever process you're using, and I mean whatever process you use, is transparent and consistent for similar types of property and can reasonably be attributed back to the statute as written, we're not going to take exception right now. And we collectively agreed on that. And so that means as long as you can show what you did and show that you did the same thing for all taxpayers in the same like category, then we're not going to take exception. You're not going to get a write-up from our offices, or settlement won't not be approved, depending how you decide to do it. Some of the things we're going to work toward, we've already drafted some language to try to clean this up for next year. We're going to request the law be changed to allow 100% of the local service fee billed and collected, whether current or delinquent, and late assessment penalty to be associated with a tax district or location where a majority of the property is located within the county. Because the legislature did not want taxpayers to have to file a business personal property tax return and exemption for every location. They wanted to make it easy. So we thought, and these are just potential solutions, and we are open for discussion, open for questions, and open for input on these. But we thought if we could figure out how to change the form to include language where a majority of it is, or is it all in one location, then that's going to give us the information, the county auditors, to place that in a geographical tax district location. And so I would welcome feedback on that. The session is committees are just starting and sessions are just getting started. So I know that Mark Palmer, who is your lobbyist, has been in touch, and I've been in touch with him, letting him know that this was our plan to work through. It will be included hopefully in the DLGF bill, and I don't know what number that will be when it comes out. And so with that, I'm going to turn it over.